Hey everybody, it's me, Gregory Mannarino. How are you today? It is Friday, September 28th, 2018. Why is Greg giddy this morning? Alright, sit down for this one because I'm going to need you to put a couple of things together in your head. So, let's back up just to Wednesday, Fed Day. Remember that whole big thing? Well, on Wednesday, we all know what happened. The Federal Reserve did raise rates. No surprise again to any of you that follow this blog. I've been explaining this for a while now. Okay. The U.S. 10-year yield, sit down, was 3.11 at the announcement that the Fed was going to raise rates. Well, guess what the 10-year yield is right now? 3.03. Think about what I just said. The Fed raises rates, or supposedly raises rates, but yields drop. How did that happen? Well, I think you already know. In a fake managed market, well, of course, you can have a Federal Reserve that raises rates, but rates actually go down. You understand? This is so engineered. This is so absolutely off the freaking Richter scale, incredibly fake. I'm absolutely speechless. But you know something that's funny? You'll not hear any of this from the Confederacy of Dunces, all of them. They probably don't even realize what I just said. I mean, it's just so simple. We get a rate hike, but rates drop. Oh yeah. Oh, that's the new norm. Don't you know that? What does a lot of this have to do with here? Again, this is a managed market. The environment of risk will be maintained even if it's shoved in our face like this. We get a rate hike, but rates drop. They will push cash into the stock market using the bond market as a tool to do it. Period. Now, stock futures this morning were down because of issues in Europe. Once again, you know, the European debt crisis, all their problems, their banks, they still exist. But, you know, you're not supposed to know about that. So a massive amount of effort is going on right now to prop up our bond market by keeping rates suppressed. It's unbelievable. It's unreal. What we're with. It literally is unreal. Fed raises rates, but rates drop in the same week. Have you ever heard of this before? Well, it's kind of interesting. I would not be surprised at this point to see the U.S. 10-year yield drop below 3. But they're supposed to be raising rates. Oh, wait. They actually did raise rates, but rates are dropping? Very interesting concept, don't you think? But again, in this fake market, managed market, anything can happen. And I mean anything. As I am doing this video blog, the dollar is stronger, and its effect on the stock market is being muted or offset because of yields coming down, despite the fact that the Fed raised rates. Incredible. It is all an attempt to keep the stock market propped up here. Gold and silver, despite the stronger dollar, are catching a very nice bid. Last I looked, silver was up over 2%. Cryptocurrencies are under a little bit of pressure today. But look, you know what really matters here? Watching that 10-year yield and in amazement as it drops. The same week the Federal Reserve raises rates. I mean, I don't know, man, people. Let me know what you think about all this, because it's frankly too much for me. Too much for this guy right now. Anyway, we're going to watch this lovely day play out, see what they do. And I wouldn't be surprised if stocks finish in the positive today, because they're actually slightly down right now. Anyway, we will resume these lovely festivities at the end of this freakishly insane day. See you then.